Today we have the SEC going directly against the U.S. court system, and I think it's going to be a good one for you guys. We'll break this down for you. There's a lot happening with Gary Gensler, how they are strategizing against potentially some of the rulings already by the U.S. courts. You don't want to miss it. My name is Paul Barron. Welcome back into TechPath. All right, let's get into it today. Before we start, I want to thank our sponsor, and that is Tangem. If you guys are looking at a secure way to do your own self-custody, one of the things you can do is get into these card wallets. Now, a card wallet is like a physical wallet. It in itself works in tandem with your software on the phone, and it does a great job in terms of your overall security and protecting your digital assets. If you like self-custody, this is one of the tools you can use. Just go over, go to Tangem.com, click Get Tangem. You've got a couple of options here. They've got a brand new wallet coming out that will give you optional seed phrase capability. All of that happening in October. So jump in, use our discount code. It's going to give you some additional discounts. Make sure and get the 3-pack too, because it's a better deal. So use the discount code, click the link down below, and start your journey on self-custody. Let's get into the first thing. I want to go to the clip that explains Gensler's strategy here about the current status of our courts and their decisions so far and what he might do with that. Listen in.
When you take collectively recent court decisions we have seen, how have they made you, Gary Gensler, think differently about regulating this space?
I'll tell you, I think the same thing. It's about ensuring for compliance and protecting the investing public. And this is a field, it kind of reminds me a bit of the 1920s, where a lot of people were getting hurt. The securities laws apply to crypto security tokens, and there's nothing incompatible with those tokens, with the securities laws, and we've just seen so many people hurt and lost their money, and there's so many hucksters and fraudsters in this field.
All right, so most of this has been, as you guys know, if you've followed our channel for very long, you understand where the problems had lied. Most of it is because of the lack of clarity, the lack of real legislative direction, and I think that's been the case. And, you know, Gensler's position has pretty much been unchanged. He truly believes that all tokens are essentially securities and that they are, you know, the savior against protecting individuals' rights and hopefully their finances. The only problem is that we see just as much fraud and problems within the traditional finance markets as we do in any other markets that are speculative. So I think this is still Gensler's miss shot of really understanding what the future of innovation really means for crypto and blockchain. Let's go to another clip here. This is where maybe could the courts convince him, because the rulings have been coming out pretty sequential here in favor of the blockchain industry and against the SEC. Listen to what he had to say.
And so nothing any court would say would change your mind on
that? I wish something a court could say which would actually bring the compliance sooner. Having said that, there are a lot of folks in this field that are trying to say, well, those don't apply to us. And I suspect you've interviewed one or two of them too.
You'd be right about that.
First thing I want to say here is Gensler's selection of words. His pauses are getting further and further apart. Why is that? I mean, he seems to be so intrepid in the past, and now all of a sudden he's taken this role of just a very, very strategic way of answering questions. And I think it's an interesting concept, especially because of the fact that he's had his, you know what, handed to him over the past few months in terms of court rulings by judges who are essentially following the law. And this is where I think it starts to rub with a lot of people about Gensler's kind of frivolous, you know, attempt at, hey, I don't really care what the courts have to say. They just need to give us the ability to litigate and execute, our plan over the SEC or over these financial markets, including the crypto markets in general. Stuart Alderoty kind of jumped in on this on Twitter. Stuart Alderoty, obviously coming in from the Ripple case, fresh off a fairly good win. But what's most concerning to me, let me zoom in on that, and should be to you in the full video clip, is shocking admission of an unelected bureaucrat that he won't respect the decisions of the court. This is the problem that the overreach of the SEC continues to dive into, but more important, I think it's more importantly around Gensler himself, because there's enough dissent in the SEC, especially in most of these rulings here recently, that it does pose a very interesting, position right now. Here's John Deaton coming in with a tweet. Just watch the reaction of the question posed. Any court includes the Supreme Court of law of the land. These people are so inherently arrogant that they think they are above the law. Let me introduce you everyone to the real life example, of a megalomaniac right there, Gary. And I would agree. I think this interview alone started to really showcase how Gensler thinks about these things, and he's strategically lining up. I'm wondering if there's something big that Gensler, because remember, if you watched one of our other clips when we did the government shutdown video, part of that was in a clip here, and there was a lot of nervousness around these government shutdowns. I don't know, is there something brewing down there with the SEC? I want to go to this next clip because this is where Gensler is going directly against a decision that's already been made around ETFs. Listen to what he had to say.
I'm not going to ask you to comment specifically on what's next in the grayscale case, but in part of that ruling, it was about the distinction between futures and spot, and it not being clear that really fundamentally they were differently in terms of the fraud and manipulation you often talk about. My question to you is there a world, given those concerns you have about fraud and manipulation, that the SEC could actually revoke approval of a Bitcoin futures ETF?
We take into consideration anytime a court rules, and we consider it and think it through and deal with filings that are in front of us. And we have a number of open filings in the Bitcoin exchange traded product space.
For spot products, sure, but could you rule out revoking the futures product?
I'm just not going to speak to the filings. And you are absolutely right. There are a number of Bitcoin futures exchange traded funds, and they've been live since about 2 years.
All right, so there was some body language in there in that interview, and part of this was the smirk that Gensler has on his face when that question was asked. And this concerns me because it does and has the ability to impact the markets in pretty much a catastrophic way. Traditional traders would see this as a very bad move by the SEC because this could put a lot of futures ETFs at risk. And I think for just him to even entertain that, as opposed to an unequivocal no, we would not do that, we've already put markets in motion, is very telling about the strategy and his grab of power that the SEC has continued to go after. So it's a very interesting situation right now brewing within the SEC. There is something up. There is something up with Gensler and his strategy in terms of these market conditions. I want to go to another clip here on Custodia Bank, because this kind of starts to play into this, because there's some other scenarios playing out with Custodia Bank and the Fed. I'll explain this in a couple of clips so you guys can catch up. You probably are not completely aware of it. Let me go to this first clip that kind of gives you an overview on Custodia.
Okay, so our proposal at Custodia to the Fed was to hold $1.08 for every dollar of demand deposits, US dollar demand deposits,
wow,
at the Fed itself.
That's revolutionary.
Right. But just to give you an illustration of how different that is, Silvergate was holding 10 cents of cash for every dollar of deposits. Big difference.
Oh, my God. You can never have a bank run because it's there.
Well, you could have a bank run, but the point is the bank survives it and cashes all the customers out.
Yeah,
right?
You're right.
All right. So Custodia, in case you're not aware, is a bank that has tried to get a charter, and they've really been met with a very significant pushback by the Fed. And it changes the dynamic of how banks' fractional reserve works. If you are aware of fractional reserve banking, basically think of it like this. A bank takes in $10 and they can loan out $100 on that $10 deposit. That's the difference between a true mark-to-market style that what Custodio is trying to propose, which is, as Kristen, or as she said there, Caitlin said, is that it would be $1.08 for every dollar that's deposited. Again, now these are banks that will most likely have significant fees, but I think people are ready for those because of the security that it does offer. The problem is that they can't get approved through the charter system. All right, so I just want to jump. U.S. court rejected Fed's motion to dismiss the Custodia Bank case. This happened back in June, so this is a good position, I think, overall for Custodia Bank as a whole. Let's go to our next clip and why this bank matters in the whole scheme of things. Listen in.
If you take the Ripple case or you take the Coinbase case, you're talking about the underlying asset and you're talking about token issuers and whatnot. But when we're talking about your fight, you're talking about users, developers, companies that need access, to be able to pay their employees in US dollar.
The Custodia case is about something much more foundational, to your point, which is, can a business even survive if it doesn't have US dollar access? A lot of the startups in the industry might be looking at the SEC for clues as to whether their project is going to be deemed a security or not, but they won't even get off the ground if they can't get a bank account. The first risk isn't banning crypto, it's closing off the on-off ramps as the risk. Yeah.
100%.
So this has been ongoing, really, the choke point 2.0 that we've talked about. If you haven't heard about that, go research it. Go out on the web, just research choke point 2.0. The idea behind this is to basically shut off all the on-ramps for any kind of startup and innovation when it comes to US dollar access, is what they're talking about. And these are startups in the blockchain industry. So this means gaming companies, NFT projects, anybody that is all in on blockchain and how they might take in funds and or operate as a business entity, because this is where they have no banking option right now with all these banks starting to shut down and shutter their operations around blockchain. Let's go to our next clip, which is going to get into the concept. Well, actually, let's go to the first clip here. This is more around the current status of the case. Listen in.
And the judge came back with a decision, and here's what has survived, and alleges that the Board of Governors agency's action in denying Custodio's master account was arbitrary, capricious, and abuse of discretion, or otherwise not in accordance with the law. And we've all heard this arbitrary and capricious language that came down, obviously, in the Grayscale case. But that's the one, that claim survived. Am I right?
Discovery in the case runs through mid-December, and there's a trial date scheduled for April.
All right, still what surprises me is that we continue to see these wins in court cases. Meaning, judges that understand the rule of law, they understand the current case law that's in place right now. And yet at the same time, we have all these federal agencies, government agencies that continue to push from a litigation standpoint to essentially try to outmaneuver many of these companies. The advantage, I think, some of these, there's a few mark companies out there right now, like Coinbase, Ripple, now Custodia, that will be in a position right now that could be setting the tone. Because in many cases, there's a lot of companies that would never be able to go to this level in terms of fighting some of these government agencies as a whole. Let's get into the next clip, which goes into just the consequences around Custodia with the SEC.
I thought that the Biden administration was nuts to have some of these cases in the federal court system, because they're opening up longstanding gray areas about the jurisdiction of federal agencies. For example, the Howey test in the SEC, right? That's been law for decades. And now it might be reopened by the federal courts, and the SEC might not get the answer that it wants. Okay. And so the crypto freakout that it had was so extreme that it went to this length, where it's now across multiple federal agencies in multiple federal court districts, facing what I would call bet the farm type litigation, that if the agencies lose, their jurisdiction is changed permanently. Federal agencies don't like to be sued because they benefit from the gray area, and they constantly, frankly, have been expanding their jurisdiction, and nobody's really pushed back. That was a construct of the Supreme Court. That wasn't a construct of Congress. And so if what the court gave, the court might take back.
All right, so Caitlin mentioned a few key things there, and one of the things I think is the overreach that the SEC has really pushed into the blockchain industry. And they've pushed so far in that it's kind of a cornered animal. There's no choice but to fight, as opposed to a strategy that might have worked would have been that slow dredge of small litigations, let things live, small litigation, that to the point where they just win in the end. But this extreme radicalness behavior that they've had over the last really 3 years has accelerated everything up to now, what we're seeing in terms of even Supreme Court cases starting to roll out, now potentially threatening their own current position in terms of governance and how and what they may not have any longer is this overreach. Part of this will get, I think, blown out into Congress, because Congress at the end of the day is really the ones who set the laws, and they don't necessarily like these agencies going out interpreting these laws differently. So I think that's the other factor that plays into this. Now, Gensler's going to go in front of Congress again on Wednesday, September 27th. This is the 2 dates. We already went through the first one, the 12th. That was kind of a nothing burger, but he does go in front of the Financial Committee on Wednesday, September 27th. So make sure and check that out. It's going to be at 10 a.m. Let me kind of zoom in on that. On the hearing entitled Oversight of the Securities and Exchange Commission. This is where he's going to be asking for funds. It's possibly where Congress might look and say, hey, we need to cut back, or we need to look at how we even approach scenarios with the SEC as a whole. Another thing that's happening out there is Coinbase is getting ready to get involved very quickly with a potential Biden administration terrible for crypto, and pledges $1 million donation to a super PAC. So this will be interesting because now we're going right into an election year. Obviously Coinbase is not interested in the Biden administration, but they're interested in being able to support others. And I think that's the whole idea behind government. And of course, these super PACs do work in many cases. I'm not necessarily a big fan of those, but the point that they have been pushed into this says a lot about the state of crypto in the United States. It's very intriguing as to how this might play out. So don't forget to go over to the Stand with Crypto. And Coinbase is not, by the way, they're not an advertiser. We just do this as pretty much a public service announcement to the industry. Go over and click on that Get Started. Call your congressman. Go standwithcrypto.org. Call your congressman. All you have to do is put your city and your zip code in there. And if you hit continue, it's going to give you the person that is involved in your congressional district. You can even call the number. You can either use Skype or just dial it up, and then use this script right here. We've done this, and we've actually called our congressman, and we've had some interesting conversations with them. So I think it is helping. Just really, focus in on the impact it might have on you, your family, your business, whatever it might be, that this kind of scenario plays in front of the U.S. Congress. And remember, this is the FIT 21 Act right now that is getting ready to go to vote here in October. So just make yourself a little bit aware of what's happening, and then make these phone calls. They help. And I know we're getting a lot of people that are using this website right now, and we appreciate all you guys' help. But we're trying to get to thousands of people, tens of thousands if we could, to be able to call your congressman and get out there. All right, if you guys are not part of the Diamond Circle, that's another place you can come in. Join into our own group, and we keep you up to date on all these things. When we don't do it here on YouTube, we do an additional podcast over there, more research, even some stuff from me that is not done here on YouTube. So make sure and check it out. If you guys want to reach me, it's out there on X, @Paul Barron. We'll catch you next time right here on TechPath.